What are my current opinions on Novo Nordisk stock? Is it currently a buy, sell or hold? In this video we will be trying to find out exactly this. We're going to be looking at some of their financial data, looking at the news surrounding this company to help us determine whether or not this stock is worth your investment currently. So let's kick this all off by looking at Novo on a year chart. So currently on a year, they're not doing particularly great. Currently they are down 21.72% with an earnings per share at $2.96 and a PE ratio set at 28.83 with the current price being at 85.34. They pay out a dividend yield of 1.7%. With there currently being reports such as Novo shares have a long road back from a 40% slump, with Novo investors getting a much needed boost back from last week's trial results for experimental weight loss shots, but there is still a long way to claw back from the declines in which it has seen in the past 6 months. With the drug maker shares jumping last Friday as one of its shots delivered as much as a 22% weight loss in an early trial, that helped soothe investor nerves about Novo's drug pipeline, but wasn't enough to reverse the recent declines. The stock is down 40% from its record in June, with a chunk of the drop coming after its disappointing results from a separate drug called, I'm not going to bother to pronounce that, but it's a different drug. With this experimental drug shot missing Novo's own expectations for weight loss and performs roughly in line with Eli Lilly's and co. Zepbound's drug, which is already on the market and competes with the Danish drug maker's existing treatment. This resulted in about $93 billion being wiped from Novo's market value in a single day after the announcement, with several analysts slashing their price targets. So obviously they have not had a very good 2024, to be quite honest, with them obviously having a massive drop in market share. But can we see this start to reverse in 2025? It is potential. Let's look at what the analysts are expecting for their earning results. So looking on the analysis page on Yahoo Finance, we can see down here we have an expected growth rate of 19% with a surprise rate varying from 10% down to minus 8.61%. So what could potentially affect this stock going forward from here? Well, there is of course the demand for the GLP-1 drugs. With strong sales in diabetic and weight loss markets being the biggest drivers for this stock, obesity is a massive global market with $100 billion plus of potential. If demand keeps outpacing supply, it could push Novo's stock much higher. Of course, there is production and supply chain capacity speculations around this stock, with Novo struggling to meet its demand for the weight loss drugs. If they expand production successfully, revenue and stock price should increase. If supply chain continues to have issues, it will of course have negative impacts on this stock. However, there is of course strong competition with Eli Lilly with their similar competitive drugs. Eli Lilly's drugs prove more effective. It could take market share from Novo for sure. Investors are watching head-to-head clinical trial results, so there is clearly not an earnings issue with this stock. It's more of a actual fundamental business issue with the stock, in which is definitely bringing the price down currently. Of course, product pipeline for this stock is going to be massively fundamental for its success, as if it does manage to come out with a breakthrough in, for example, the fact that they are expanding into cardiovascular and liver disease treatments, then it will definitely help this stock for sure. Other factors which are out of their control are such issues like insurance companies restricting coverage of their potential treatments. US Medicare coverage for weight loss drugs could massively expand into the market. The cost of their weight loss drugs is between $900 to $1,300 per month, making it a insurance coverage issue. Furthermore, any government regulations could definitely affect its profits, especially in the US and EU. So we're now going to move over to my system to see whether or not this is an actual stable stock to be investing in currently. And to kickstart this off, we are going to be looking at the liquidity ratio here on the left. So on a liquidity ratio, this is on an annual basis, we can see here that they are relatively good. Ideally, you want to see this consistently above 1. This essentially measures their total debt to their total cash, and currently, as of the recent year, we're seeing it's just 1.1, which means for every dollar of debt in which they owe, they have about $1.1 of liquid cash to pay this debt back in. It is, of course, not massively off compared to its debt in recent years, but you would want to see this better for sure. So this is where things take a turn for the better for Novo as we look to the retention rate. So on the trailing 12 months, we can see that we are at 35% as a retention rate, and this is consistently above 30%, which is incredible. Typically you want to see this above 15 at the maximum, so to sit at 30 is incredibly strong. Trend lines are only actually projecting this to just increase over time as well, which is incredibly good. But of course, profits isn't the issue for this stock. It is actually whether or not their products are expected to work that will affect this stock. So looking at the numbers will only take us so far, and to take us a bit further, let's look at the free cash flow. So looking at the free cash flow here, we can see that they are actually really good on the free cash flow, which will explain their liquid cash situation, as this money will be used to pay down their debt. This money will also be used for stock buybacks and paying out dividends. So now looking on a 365-day exponential chart here, we can see that the moving average is projecting this to actually look as if we're going to see a bit of a bowl effect in the next 12 months. So we could actually see a rebound in this stock. Obviously, we've had the massive sell-off due to its trials not being particularly successful. So we are massively below the exponential lines at the moment, so it could signal a potential good time to buy in. If we do move over to the 91-day exponential chart here on the right, we can see a very similar story, with us being closer to that trend line, just slightly above it, which I would actually say is a bullish indication, as we are above the 91-day but below the 365-day, which gives us room to hopefully expand into the 365-day exponential chart. So what are some of the quick figures for this company? Obviously, they have the PE ratio of 26.94, a 52-week high of 148 and a low of 78, this being a difference of 69.98. They have a beta rate of 0.45, which shows this stock doesn't have a lot of volatility, and the price is currently priced in at $85.33. So now we're going to look at the intrinsic value for Novo stock. So taking a growth rate and a surprise rate from the previous Yahoo analyst mishaps, we can get a growth rate of 19.47%, with the earnings per share being set at 2.97, and a AAA bonds yield. We can see the intrinsic value is set on the left here, which is the bullish chart, at $129 compared to its current $85, which gives us a lot of room for growth. If we add in a margin of safety of 25%, this gives you an acceptable buy price at $96, which is of course massively below where we are on the current price, which prices this in at a buy. However, if we move over to the right here to the more bearish formula, we can see the intrinsic value is set at $72, which is below where we currently are, which obviously doesn't give you any room for growth. And with the margin of safety at 25%, again, we can see an acceptable buy price at $54, which is obviously, again, massively below where the current price is. If we were to take the mean of these two, however, we would see an acceptable buy price at $75, which again is $10 below where we currently are, but the intrinsic value is above where we currently are, set at $100. So there is potential room for growth in the intrinsic value of this stock for sure, but how much growth is hard to say, especially because it's not a numbers game for this stock. It is a competition and trials success game for this stock. To further analyse this stock, we have Peter Lynch's valuation here. We can see the result is at 0.72, which puts this stock at overvalued, but I would actually move this up to fairly valued currently, if not slightly undervalued, as this is really bearish. But that's enough about me, what my thoughts are on this stock and what my system says. Now we're going to move over to see what the analysts actually price in for this stock. But very quickly, I just want to actually move back over to my system here and add it in. I am actually going to be putting this in at a buy. However, I will be stressing that there isn't a massive room for growth. There's definitely better stocks, especially because this stock is not potentially one that the numbers can really help it with. Again, it is purely trials which will provide growth for this stock in the future. Obviously, the numbers do have a massive case for this stock, but if their next trial was unsuccessful, you're not going to see big returns in this stock. It's just going to go the complete opposite way. But as far as the numbers are concerned, it is a buy. So back to the analysts, they are projecting a 90-day projection of a high of around 120 and a low of just below 60. With scrolling down here, down to the analyst recommendations, based off of 10 analysts, it is based on a buy. However, if I move my camera, we can see that 4 of them price this in at a strong buy, 2 at a buy, 3 at a hold, and 1 at a strong sell. I don't know what that strong sell is seeing. Maybe he knows something we don't, but I would be putting this at a buy. It's definitely not a strong buy. Obviously, it's just a buy. Maybe pushing towards the hold currently. There is obviously the Q4 report coming out, which, when is that? That is on the 5th of February, so in a few days' time. So if you were to be looking to hold this stock before, I would actually, if you were trying to see whether or not to buy before, I would actually say before is probably your better option, because I do think the numbers are going to come out as really good for this stock. However, it's not, again, it's not really a numbers game with this stock. It's more of a trials and competition game. So when we actually compare this stock to their competition on the PE ratio, it's relatively on par with the rest. On the price to sales, it is actually below. And again, on the earnings per share, it is below. And when we look at the revenue, I've just realized my camera's covering up. On the earnings per share, we are below, and the revenue, we are just below Pfizer here, but we are actually doing relatively well. I say we, I actually don't hold any of this stock currently myself, but it is doing really well on a revenue compared to its peers, which is really, really good. So now we're going to look at whether or not it is a good time to buy this stock currently. I would like to say the date is currently the 31st of January, so it will depend on when you watch this, of course. But if we do look on this chart, we are currently in a short position, and quite convincingly. Personally, I don't want to buy into a stock when we're still in a short position like this. If we do look at the RSI here, we are relatively fairly bought in at the moment, if you know what I mean. We're above the 40 and 60 mark there, so we are relatively stable on that front. But according to the MACD trend lines, we are actually in a short position. And if we go over to, let's say, a 15-minute chart, we are actually in a long position. But there it's crossed back over into a no, that it's there, it went to short, and there we are now in a long position still. But I don't want to base anything off of that too much, because 15 minutes, it depends how long you want to hold this for, but it does show short-term growth. And as far as short-term growth looks for this stock, it's just very sideways at the moment. There's not an awful lot of growth. But if we do actually look at the moving averages for this stock, what does it allow us to see? Let's quickly go back to a daily chart to see this. So when we zoom back out, we can see that we are massively below the 50-day moving average, the 200 and the 100-day, with us just barely meeting back up with the 50-day, the 10-day, sorry. So it does look to be as if it's possibly not the best time to buy into this stock. A lot of investors will wait for this 50-day moving average to actually go below or hit the price in which we're currently at before they buy in. So if you're looking to buy into this stock, I would wait for that, just to see whether or not we actually see a lot of growth within this stock after the fact, because right now it's hard to say. So that is going to conclude this video. This stock has been requested by a few people to me to quickly do an analysis on, and my final analysis is I would rate this at a C. It's not a strong buy. If anything, I wouldn't actually rate it at much of a buy, with the intrinsic value being just barely above where we currently are. I think if you were to buy it, I think you will see return, but there is definitely better stocks to be holding, and ones with a more stable future in mind. But if you do hold this stock, it's definitely hold. I'm not saying sell your stock. There is still room to grow. With the mean intrinsic value being set at $100, you can see it climb way back up to this line here, where the 50-day moving average is currently. So that's going to conclude this video. I hope it has been useful and you have found it somewhat entertaining or something, I don't really know. But if you have enjoyed, please do leave a like, comment, subscribe, and potentially share. And I'll see you for the next video.